Tesla earnings are just 2 days away on July 20th, and we're here to preview those earnings on today's show. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Tesla in terms of their Q2 earnings, which are just 2 days from now on Wednesday, July 20th. On today's show, we'll talk about some of the revenue estimates that have come in. We'll talk about the EPS, some of the key things that we're looking for. We'll look at take a step back, okay, with a lot of your companies, they're probably a lot like Tesla. Okay, year to date, Tesla is down 37%. But take a step back. Over the last year, this stock is up 14%. Over the last 5 years, it's just up 1,000%. And so if we're going to look forward into the next 5 years, what does Tesla got to do? Well, we got to take a step back and see where we've been and see where we're potentially going with Tesla. And we'll do that. We'll take a look at some of kind of the revenue trends that Tesla has had over the last 2 years. We'll look at the car produced. We'll take a look at capacity as well. I think that's a really big thing. Obviously, when you're making and selling cars, the amount that you can physically make and sell and ship to customers, that is very important because that will impact revenues and certainly our earnings into the future. We'll talk a lot about that when it comes to Tesla, the fact that everybody would assume, and I think even the bull case argument for Tesla at the current valuation where you're paying a forward PE of 60 on this one. Certainly it's been a lot higher in the past with Tesla. A lot of people would argue that this stock is completely overvalued. Well, how much does it have to grow to get us into a 20 PE, a 17, 18 forward PE, where value investors or more traditional valuation metrics start to make a lot more sense? And then we'll look at this from a technical perspective. Those of you that follow our FANG Stock Recap show here on the program, every Friday we analyze Tesla from a technical perspective. So you'd be familiar with the setup that we're making with Tesla. And I think on earnings, we could trigger kind of a move to the upside or a move to the downside, and both could be a signal for things to come for Tesla. Now, first thing that we'll look at is the Q2 revenue estimates. Now, I put these slides together a couple of days ago, and the estimate was at $17.07 billion on that revenue side. I'm seeing closer to $17 billion at the current time. That would still represent roughly 42% revenue growth on that $17 billion year over year. Now, what analysts are expecting to contract actually quite a bit over at Tesla is the earnings per share. They're expected this to come down to $1.83 last quarter. So in Q1 of 2022, just the last quarter that we had reported by Tesla, they earned $2.86. And so the street is expecting this to contract down to about $1.83. So there's some of your upside potentially with Tesla is the fact that if they can earn a little bit more money than analysts are expecting, that certainly will boost the stock, at least in the shorter term, in my opinion. Now, some of the key things that we're watching with Tesla, quite frankly, haven't changed. It's really that vehicle gross margins over at Tesla. Look, they're trying to scale up their Berlin and Texas gigafactories. We'd expect some cash burn on that Capex side. We'll talk about more of that in a second. But what about the straight, just bread and butter car business that's still ongoing with Tesla? What's the gross margins over there? We knew in Q1 they accelerated those margins to a record 32.9%. Are they still able to maintain those margins in this inflationary environment? Obviously, if you go to Tesla's websites, you know they keep inching up the prices of their Model 3s, their Model Ys, their Model Xs. They keep moving the prices up. A lot of that has to do, some of that has to do actually with demand, but a lot of that actually has to do with the input costs, the raw materials in order to make those cars continues to go up. Can Tesla maintain these kind of low 30 gross margins on their cars? If they do, that is a key factor in Tesla's valuation into the future. If you believe they're going to continue to deliver more and more cars, if they can maintain this 32% gross margin on those vehicle sales, well, this stock is probably wildly undervalued even at today's valuation, quite frankly. Now, Berlin and Texas gigafactories, we've obviously seen those come online more recently. recently. Both of those, according to reports, are still trying to scale up. We'll talk about in the back half of the show where we think Berlin and Texas will go, how that will factor into Tesla's capacity in terms of the cars that they can produce. Now, we are still expecting those to negatively impact on Tesla's earnings. That's why the EPS has come underneath where you saw Q1 and even Q4 over at Tesla. Quite frankly, $1.83 is pretty low for Tesla. But again, we're seeing that reaccelerate. We'll talk about if that is potentially possible for Tesla. We'll certainly find out on Wednesday. But Elon Musk gave some comments about Berlin and Texas. He wasn't really glowing about their profitability. In fact, he said, I think they were like a dumpster fire of cash or something like that. And we'll get an indication of that burn rate, not only from the previous quarter, but the upcoming quarter. What will management say about the burn rate in terms of the Capex expenditures on Berlin and Texas, and how close are they getting to where they have achievable profitability from the production standpoint? Again, we'll talk about production here in a second. And then any clues on new product? We're obviously expecting the Cybertruck sometime in 2023. There is this AI bot, which is a completely new product. You also have the Roadster and potentially maybe a $25,000 car, which I think in today's inflationary environment, probably out the window over at Tesla. But whenever earnings come up on any stock that I'm invested in, what I like to do is take a little bit of a step back. And so we can do that with Tesla. We see a year ago in Q2 of 2021, we were expecting $12 billion worth of revenue off of 206,000 cars, a little over 206,000 cars produced. We were going to generate $2.9 billion worth of gross profit, $1.1 billion worth of net income. We obviously don't have any insight until Wednesday on gross profit and net income, but we do have Q2 cars produced. This is why Tesla's announcements of their earnings are a little bit telegraphed. The fact is the company has already announced the Q2 delivery. So we're waiting on the Q2 profits, Capex spend, those types of things, maybe updates on any kinds of products. We already know how many cars were delivered and how many cars were produced over at Tesla. 258,000 were produced and over 254,000 were delivered. Again, analysts kind of use the average price that they think Tesla sold those cars at a margin, and they come up with a revenue estimate right in that $17 billion. So in a year, we've gone from about $12 billion up to potentially up to $17 billion. Now, what I like to do is even take a further step back. Let's step back 2 years ago and look where Tesla was. They were at just $6 billion. Again, 2 years ago, we were at just $6 billion worth of revenue over at Tesla. We delivered just 90,000 cars over at Tesla. I'll show you, they're producing about that much just in one factory in China, and they produced about 82,000 cars in that quarter. Tesla has come a long ways. It's a reason why when you stretch this stock chart out for a long period of time, it has gone up tremendously. You have tremendous revenue growth. You have tremendous profit growth. And a lot of people believe you have a lot more of that coming down the pike. Now, what do we have coming down the pike is what I like to do is take a step back. What we just did on the previous side. Let's look back a year. Let's look back 2 years with Tesla and realize how far we've come. Now, what I also like to do right around earnings date is see where the expectations are in the future. And the way you can do that is by using analyst estimates. Now, these change all the time. Like I said, when I put these slides together this weekend, revenue estimate was at $17.07 billion. Now I'm seeing closer to $17.01 billion on that revenue estimates. They move around all the time, but I think the key thing to understand with the upcoming delivery dates and earnings dates with Tesla is the fact that in Q2, we're expecting that $17 billion worth of revenue. Again, this is off 258,000 cars. You see this was a slowdown over the previous 2 quarters, and we'll talk about some of the reasons why. We obviously had a lot of shutdowns in China, and quite frankly, Tesla has turned major, in a big way, into a story about China as much as it has about electric vehicles, quite frankly. And so when China slowed down during the months of April and May, it really impacted Tesla's cars that they were able to produce and deliver. You see over the previous 2 quarters in Q4 and in Q1, we produced and delivered over 300,000 vehicles. And you see here in Q2, we slipped down to about 258. Again, though, what analysts are suggesting is that we'll reaccelerate back into Q3. So in Q3, you're expected to reaccelerate accelerate up to $22.5 billion worth of revenue over the $17 billion we're expecting in Q2. We're expecting EPS, or the earnings on that side, to really accelerate, get to a record $3.13 per share. You look out to Q4 of 2022, you're looking for $25 billion, nearly $26 billion worth of revenue, and earnings of $3.71. You go to Q1 of 2023, you're expecting $27 billion worth of revenue over at Tesla. Folks, that is $10 billion more than you're expecting right now in Q2 of 2022. So the upcoming quarter on Wednesday, they're expecting $17 billion. In Q1 of 2023, they're expecting $10 billion more of revenue and essentially double the EPS at $3.69. And then if we look all the way a year from now, we're expecting over $11 billion more in revenue at $28 billion, and EPS, again, being more than double, up to $3.84. Now, the bulls out there are going to tell you Tesla's going to easily do this. They're going to easily accomplish this. But there's a lot of bears out there that understand these are incredibly ambitious numbers, and they're going to rely on a lot of factors. And quite frankly, probably the number one factor is the China Gigafactory. We saw back in April and May, we had shutdowns there because of the COVID policy in China. We saw that they just sold 10,000 cars in April and 32,000 cars in May. This is on the heels of the first half of the year. You were averaging 50 to 60, maybe even close to 70,000 cars sold in the country of China back in Q1. Now, we did see a re-acceleration in China back in June, up to 78,000, nearly 79,000 cars sold in that country. So we have a 6-month total of cars just sold in China over at Tesla. That comes in at about 304,000. Now, some of you are wondering, what's the total capacity over in China? Now, what's interesting is on the previous Q1 earnings that we saw with Tesla, they put this slide in every earning. If you watch our earning videos, I tend to show this. They show you the installed annual capacity in all their gigafactories. And they said, this was back in Q1, that Shanghai they have a greater sign of 450,000. Well, an internal memo floated around the news outlets a few weeks ago. They've actually bumped that target up to 1 million. So you can see how quickly these things can change with Tesla. They can go from kind of projecting right around 500,000, 600,000 cars out of a factory just a couple of months ago. They make some changes and some tweaks, and boom, now it's expected to be 1 million. And there is some evidence that that number is probably accurate, because if you take 1 million and divide it by 12, you get to a number right around 83,000. And then if you look at the month of June, this is after Tesla had made some changes in that factory, supposedly made it a little bit more efficient. I think they've added some square footage to it as well. You also had reduction in the COVID restrictions that China was imposing. Well, they almost hit that 83,000 target that the company has for the capacity. So if Tesla's able to pump out 80,000+ cars out of China, that will support the fact that you should have very accelerated revenue growth into the upcoming quarters, and you will likely have accelerated earnings growth. Now, what's also going to be a tailwind is not just China. We talked about how we have the Berlin Gigafactory. We also have Texas. Now, in Q1, they said they were essentially at early ramp. So I'm have to rely on speculation. From what I've seen out there, Berlin is we're talking very far away from ramping up to even where California is, and certainly nowhere near China. So Berlin, from what I'm seeing, is producing just a handful of vehicles. We're talking about thousands per month. Texas is a little bit further ahead. From what I've seen out of reports, they're producing upwards of 5,000 cars a week over in Texas. 5,000 cars a week puts you right around that 250,000 cars per year. That's certainly well underneath where that factory is expected to be. According to rumors and news reports, Tesla expects at some point Giga Texas to be pumping out 750,000 cars. That's in the shorter term. And Berlin, I saw estimates right around that 500,000. Again, these two factories combined, Berlin and Texas, are producing like tens of thousands of cars cars in a quarter, they're expected to accelerate that to the 10th degree. Again, that would also support the fact that you have these massive revenue growth and earnings growth projections just over the next couple of quarters with Tesla, let alone if you start looking 4 or 5 years down the road. So what I decided to do is start to think about where Tesla is today and where they could potentially be a year from now, maybe even 18, 24 months from now. So the trailing 12 months production over at Tesla, again, what I did is I took the amount of cars that they have sold over the past 12 months. I included the most recent quarter, which we have data on. Obviously, some of the quarters over the past 12 months have included some shutdowns over in China. It has produced a little bit of supply out of Texas and Berlin, but not a whole lot. So you have the trailing 12-month production over at Tesla, a shade over 1.1 million cars. Now, I created a quote dream scenario forward capacity estimate. This is based on California achieving about 600,000 cars per year. This is on China hitting that 1 million car production level, which is quote rumored inside the company. This is Berlin achieving 500,000, which I don't think is going to happen anytime soon. And this is Texas actually overtaking California at about 750,000 cars. You add all these numbers up, you get to a number close to 2.85 million over at Tesla. Again, that would be more than double the trailing 12 months production. In fact, it's almost triple. So there's your bull case argument with Tesla, is the fact that all of these factories will eventually get over the restrictions when it comes to the virus. They'll get over some of the supply chain bottlenecks, which has slowed down a little bit of input and output out of the factories. And the two new factories in Berlin and Texas will scale up relatively quickly and start producing more and more cars, giving Tesla the ability, maybe over the next 18 months, to deliver more than double what they've done over the previous 12 months. Now, certainly if Tesla is able to do that, the earnings and the revenues will follow. We see here for the full year, analysts are expecting $11.85 of earnings. Again, that is 75% growth year over year. And even when you have that 75% growth, you've got a forward PE on Tesla close to 60. So for Tesla to grow into that valuation and attract more and more investors over time, well, they're going to have to continue to grow. And I showed you really the bull case scenario that they're going to be able to do that. If you are bearish on Tesla, you are bearish on some of these scenarios. You're either bearish on China, you're bearish on Berlin and Texas, or you're just bearish in general on the demand going forward with Tesla. Because as we see in 2023, analysts are expecting $16 in earnings for the full year. That would still give you a forward PE at today's price, today's valuation on Tesla at 45. That would be 35% growth. In order to get Tesla's price to earnings, again, we're looking at a forward price to earnings over at Tesla. To get that south of 30, Tesla needs to nearly triple its annual EPS estimates of $11 per share. It's not until you get out to December of 2030, a full 7 to 8 years away, when you triple your earnings to $37 per share. Now you're at a sub 20 forward PE over at Tesla. So guys, even if you are very bullish this company, which I personally am, it is not going to be easy to meet these types of earnings and these revenue estimates, because I showed you the earnings literally have to triple over the next 7 years in order to get a 20 PE at today's valuation. You're going to need to do that on the revenue side, obviously, as well. You're going to need to triple, nearly quadruple your revenues from about 85 billion all the way up to $350 billion over at Tesla in order to achieve that. The only way they're going to achieve that is by producing more and more cars. And I showed you the dream scenario based on the setup Tesla has right now is 2.8 million vehicles. That would more than double the capacity they've seen over the trailing 12 months. Quite frankly, they need to almost quadruple probably their production level in order to meet these targets. Obviously, the bulls will say Tesla will be able to do it, and the bears will say maybe there'll be some bumpier roads ahead for Tesla. Now, from a technical perspective, I do have our volume chart over here. There is some volume accumulating accumulating and some people accumulating the shares. Obviously, Tesla has been on a little bit tighter rein. I'll zoom in here in a second, but it's been in a pretty tight trading range over the last couple of months. Quite frankly, it's been between about $625 per share up to about $750 per share for several months now. So it's driving some of the volume profile. If you have a break lower in Tesla after earnings, you see there's very little from a volume perspective underneath about $550 per share on Tesla. So if Tesla makes a strong move down heading into earnings where it gets south of, I would say, probably $600 per share, wouldn't necessarily be a knee-jerk reaction to buy this one, because if the momentum continues to go down, I actually have a lighter shade green box here, which I'll kind of emphasize a little bit so you can see it a little bit better. There's a green box of price action down here, which has a little bit stronger volume profile than the price action above at about 500 to 550. It's actually south of about 475 on this one. I'd be a little bit more excited. Again, this is if the momentum continues to come down with Tesla. I'd be a little bit more excited about prices south of 475. Now, the opposite certainly could happen. There's certainly some upside surprises that we could see with Tesla, potentially a product announcement. I think more specifically, we could be looking at these gross margins. We could also get positive guidance into the future on China. We also could get positive guidance on Berlin and Texas, which again are producing tens of thousands of cars, which is just a fraction of where the company and most investors expect those facilities to be, probably within the next 18, certainly 24 months out. So we could get an upside surprise with Tesla. From a technical perspective, it wouldn't take much to continue the momentum that we've seen with Tesla over the last couple of months. Quite frankly, we've been making higher sets of lows. Unfortunately, that has not been confirmed with higher highs. Typically in an uptrend, you would expect the higher highs to continue to get high just along the lows. In fact, this is kind of wedging out, which is not that alarming or that unfamiliar, especially heading into earnings season, as you have a lot of investors like me that are just going to wait until July 20th, wait till we kind of digest the move, digest maybe the next couple of days of trading with Tesla before we step in and buy this one. So you have less people probably accumulating these shares, but you can get a move to the upside with Tesla. I think the thing to understand is, like a lot of stocks in the stock market, in the more intermediate term, okay, shorter term with Tesla, it's kind of in an uptrend. It's making higher lows. It's not technically in an uptrend because the higher highs are not following along with it. But in the intermediate term, we're talking about year to date, the stock's obviously in a downtrend. Okay, you're making lower highs, you're making lower lows all along the way with Tesla. Now, longer term, obviously we're in a massive uptrend in this one. That's why when this one pulls back, the knee-jerk reaction is to buy, because the much longer term is up with Tesla when it comes to the share price. Now, the thing that I want to note though is this stock could have an incredible move after hours, after earnings. Currently, the stock is down here at about $750 per share. Quite frankly, the stock could move, it could gap, it could do whatever it wants, all the way up to about $1,000 per share. But notice what we would be doing from a technical perspective if we got to about $1,000 per share. Folks, that would be a $250 move on Tesla. And that can happen in a day. It could happen over the course of a week, 2 weeks, a month. Technically, in the intermediate term, you still would actually be in a downtrend with Tesla. You would just be making another lower sets of highs. And when you got up to there to about $1,000 per share, you'd actually expect red candles to show up and then potentially make lower sets of lows, retesting down here south of $500 per share. That's what it's saying from a technical perspective. You're waiting for Tesla to tell you something different. On the bull case scenario, you're looking for a break above the previous highs, which are right here at about 1130. You get up into about $1,200 per share with Tesla. It's telling you, look, there could be a potential bottoming formation coming in Tesla very soon. Even if you got up here to 12, I would still expect some kind of sell-off in the stock to materialize, but I would be much more eager to buy this on the pullback before you made previous lows, because from a technical perspective, you made a new high. Same story on the downside. If this one goes negative negative after earnings. Again, digesting the news, figuring out what the news actually is. I tell you what, if this China story is still intact, if the Berlin and the Texas Gigafactory scaling up are still intact over at Tesla, well, that's the whole story with the stock. So if something else sends this stocks lower, this is the same as it breaking to a new high. We'll have broken out the bottom of this channel, and if we do it in a major way, you'd want to come south of about $560 per share on Tesla. You come south of 560 on Tesla, I think I'd be a little bit more excited about that. Again, understanding that the volume profile underneath 560 is very thin. In my opinion, you'd probably cut through that very quickly with Tesla, pulling you south of about 500. That's where I'd be a little bit more aggressive on that downside, because again, from the longer term perspective with Tesla, the stock chart is essentially straight up. Now we've gone sideways and down just a little bit over the last 365 days with Tesla, but it's somewhat understandable, especially when you digest the incomplete story. So for me, the bull case with Tesla remains intact as long as China can scale up to, a million factory capacity. That is absolutely fantastic, considering the fact that this company over the last trailing 12 months has delivered just 1.1 million cars. The fact that they now have one single factory in China that can produce 1 million cars is incredibly bullish for the future. This is why you have analysts that believe in that bull case scenario, boosting the earnings per share, boosting the revenues in a major way in the upcoming quarters. As long as the China story is intact over at Tesla, and as long as the Berlin and Texas Gigafactories continue to scale up and we see profitability on the horizon for those two factories, I think the bull case scenario is still intact with Tesla. I don't necessarily think the next 5 years are going to bring 1,000 increase in terms of the share price, but this could be an amazing performing stock over the next couple of years if this company is able to achieve some of these targets. And that honestly is a big if, but we'll get some answers to that on Wednesday, July 20th, Q2 earnings for Tesla. Be sure to hit that subscribe button and potentially like this video if you enjoyed it, because we'll be back on Wednesday with Tesla's earnings. Hopefully you guys have a wonderful week. We'll see you on Wednesday. Good luck with your investments.